Alright, good morning, welcome. Yet another day. It's the last day of the week, and next week will be the last week of the month. As we prepare to round up this Q3, I wanted to share my expectations for this day. Of course, right now it's still midnight. It's not recorded as I would during the New York session when we already got some information for the day. But as we all know from the previous two videos that I've made this week, I am very bullish on the indices. I already mentioned how I'm expecting the all-time highs to be the case this last quarter of the year. I expected this to just be a retracement for a continuation higher until we get to the all-time high there. So on NASDAQ, we do have the possibility of creating a weekly gap here by the end of today, so we would have to see how the daily candle closes today, which will determine the weekly candle, because if the daily manages to get all the way to the previous daily high, then this would be a very solid bullish candle, right? And if that happens, I have a feeling this will be left as a breakaway gap, a gap that we wouldn't even bother filling, wouldn't bother touching. So very critical for next week and of course the weeks to come. But personally, I wouldn't like to see us tap into this gap. I would like to see it left open. When we go down to the daily time frame, we did finally trade into that daily BC. But as you can see, price actually disrespected it by closing below the gap. But sometimes I am aware that NASDAQ can be, should I say, dramatic. It can be extra, because you could find it disrespect a PDRA from a high time frame and then respect it again after that. For example, we still have this order block or breaker residing over there. Just want to make this a little bit thicker. Let's do that. We have this breaker residing over there. It's a breaker because we swept a low, created a swing high, and now closed above that high. So this acts as a breaker now. So yes, we disrespected this PDRA, but we still have another one. We would have to literally trade all the way below this bullish candle, or we would have to trade all the way there for me to say that this plan for being bullish is probably invalidated. So I still expect this to hold, even though we've disrespected this CB. The rest and this BC, the other reason why I think this would hold is because when we go to the sister pair, the other index, which is the S&P 500, we will see that yes, we didn't manage to trade to the breaker, but we are currently still respecting the buy side imbalance, sell side inefficiency. So we're still respecting the BC there. This makes me think of the easy condition of in a buy program, right? In a buy program, when price is pushing up, every down day should be an indication for you to buy the next day. Every down week should be an indication for you to buy the next week. Every down quarter should be an indication for you to buy the next quarter. Take for example, we have this whole area. This was a down week. This is just a reaccumulation, a reason for us to buy in the next quarter, right? Especially if we're still bullish, and as we saw from the monthly time frame and weekly time frame, we still are bullish. And now, right, we have been bullish since we opened up here. Price has been rallying higher and higher and higher and not giving much of a retracement, right? Finally, we take a pause right there when this daily candle stopped being bullish and actually closed as bearish. Yes, the next one closed as bullish again, but look how we failed to sweep the to close above the previous daily high over there. So us falling off like this is me thinking that they're trying to make the market participants, the players of the market, to think that we have now shifted from being bullish to bearish. But for me, I'm thinking on a higher time frame perspective, and I'm thinking this is a reaccumulation for us to continue higher. This is them, smart money, trying to reaccumulate for a continuation to the upside. So again, after every down day, look for opportunities to buy. So today, because we had a down day yesterday, I'll be looking for an opportunity to buy. And by the end of the day, right, I'll be looking for a closure above this BC that we disrespected. I would actually like to see a closure above the previous daily high. I know it's a bit of a bit of a huge move, but it would be nice for it to just continue trickling from this Asia session. Then now we're in London, so I would like to see it trickling slowly higher even during London, and then New York only gives a very shallow retracement for a continuation to the upside. Let's go down to the 4-hour. We can see on the 4-hour the massive imbalance that we see here, which is exactly why I say that, well, I have a feeling that market participants are going to think we have shifted direction. ICT traders will say something like, well, we got a liquidity sweep there, we got a market structure shift over there, a solid closure to the downside. Let's measure the 50% of yesterday's range and look to continue selling from this area, right? The premium side of the fair value gap, of course. But I would like to see this idea invalidated, which is exactly why I would like to see price continue trickling very slowly to the upside, and we create some sort of short-term low right there. Then let's say during New York, a quick liquidity sweep, making people convinced that we are in fact going down before a quick rally up and the continuation higher. So I'd like to see us close above the previous daily high. It might not happen today, it might only happen on Monday, but I'm fine with that. I just want to see this whole idea of bearishness to be completely for them to completely punish those that want to continue selling this, because I think, that's just because I think price will continue higher. I already showed where my invalidation point is. I mentioned that if we do trade below that higher time frame bullish candle, which is somewhere there, right, if price manages to come down all the way here, then I can consider that there might be a sentiment shift to the downside, right? But right now I don't care even if it retraces all the way back to this discounted gap, I will still remain bullish. So yeah, that's my idea going into next week. When we go down finally to the 1-hour chart, I mentioned something critical from the time we're on the 4-hour chart, which was the 50% of a range. What I've learned from TOTK, I forgot who it was specifically. I don't think it was Zusi, but I think it's Rich the Bull. I remember attending a session, a free session, where they mentioned that price is more likely to get to the 50% of any given range than the 100% of the range. So right now, if you were looking for a quick opportunity to buy or sell, let's say you want to buy, there's a 90% chance that we are going to get to this area, the 50%, the halfway point, the equilibrium of a range, than to get to that point up there at the 0, which is 100% of the range. So looking for a buy setup here, let's say from the new day opening gap, for example, where we opened up in the day, let's say you look for a retracement back there and you found some sort of setup to buy. You can buy and expect price to at least get here, because it doesn't happen 100% of the time, but there's a higher likelihood of us getting back to the 50% of the previous daily range, right? I'm taking the previous daily range, but of course, as I said, any given range is true. It's true for every given range. So we would have the previous daily range to work with here. We would have even maybe the weekly range. For example, we started off the week there, over there, and that's the high of the week over there. And yesterday I managed to actually participate in these sells. My TP was right there. Why? Because of exactly the range of the week. I measured the weekly low and the weekly high. I saw that the 50% of the range is residing just above this sell side liquidity. So I sold up there somewhere on a lower time frame and targeted this sell side liquidity for exactly because of that. So now I would like to see us trade higher. As I said, I would like to see a slow trickle to the upside and maybe be somewhere here in this very deep premium by New York session, so I can see a continuation higher, because I wouldn't like them to give everyone the chance to be selling this. If this is a sell trend, they wouldn't give a very deep retracement, so I would like to see exactly that. It's just market psychology. So yeah, this is my expectations going into New York session today. I might not trade myself. I might not trade at all, but I'm willing to stay and watch the charts, tape read as always. That's how I grow, how I build, exactly how I build experience. So yeah, I will be watching the charts today. I will be looking out to see what they do, and then I'll also be watching silver. The reason I'm watching silver is this is a quick addition to the videos. I know I said that I'm only trading NASDAQ, but this was something interesting for those that do trade commodities like silver and gold. I don't trade them, but for those that do trade them, I have something interesting. So I was looking at yesterday, we tapped into this daily inefficiency, this daily gap right here. So I was looking for a possible internal to external range move. For those that actually watched the playlist, if you didn't watch the playlist, I'm going to link it in the description. If it's possible to link it up here, I will do the same. And yeah, but this is my personal model before I took a break off of the charts. I look for a high time frame PDRA to be tagged, which we did. It's a daily, weekly or monthly PDRA. In this case, the daily was tagged, right? The next thing I look for is an SMT inside of that high time frame PDRA. We won't be able to see it easily here, but when we go down to the 1 hour chart, which is where we find our entries, we would see that on the 1 hour chart, we actually got the SMT divergence with silver. Let me split the screen, maybe it'll be easier to see. So on one hand we have silver, on the other hand we have gold. Keep in mind that we are coming off of that daily PDRA, right? The daily gap. So this isn't just some blind entry or something like that. And then we went down to the hourly time frame. Inside of that high time frame PDRA, I hope you guys can see the time at the bottom there. You can see the time and date. Like right now, it's written Thursday, the 22nd of August, 2024, 2 p.m. right? I hope you can see the time down there. So I'm looking at this candle, this tail right here. This low was made yesterday at 10 a.m. while this low was made at 3 p.m. yesterday. So we swept this sell side liquidity somewhere in late New York session. Notice that here we swept the sell side, right? Let's look for this same low, this 10 a.m. low on gold. When we look this side, that's the 10 a.m. low, and look how we didn't sweep the low. So we got an SMT divergence between that low and that low right there, and we have the same situation happening here with the SMT. So this SMT is the confirmation that I need, because this is an SMT inside of the high time frame PDRA that we're looking for. The next thing that I look for is a second fair value gap to be respected on this same hourly chart for me to be taking it up. Already I'm seeing bullish PDRAs are being respected. When we look at silver, it's a bit easier to see. We see that firstly, we are disrespecting bearish PDRA. So we're not respecting this CB, we in fact using it as support to push up. The second thing we are doing, we are respecting bullish PDRAs. Notice how we tapped into this gap right there in the process, and now we're expanding higher. Keep in mind this is an hourly time frame, so again this is a very good time frame to be on if you're looking for entries. We could look for maybe that buy side liquidity, but of course we have the external range liquidity, which we are targeting ultimately up there. So this is why I'm looking at silver and not gold, just because of the cleaner price action. On silver, we can clearly see price pushing higher and higher. We have a possibility of creating an hourly gap here, which would be nice to see, because this hourly gap being respected would be the second hourly gap, which aligns with this breaker over there. So we might get a test of this breaker, then a continuation higher. I'm willing to wait for this hourly gap to form and probably get an entry around 2 a.m., which is 2 hours from now. More than enough time to get an entry here. When we look down at the 15 minutes time frame, we can see yet another SMT there, where we obviously saw this tapped into the gap. This side we didn't really tap into that same gap. That's the gap right there, the BC right there. See, we didn't tap into it on gold, but we tapped into it here on silver, which is this SMT that you see. So on silver we tapped it, that's the SMT. So right now, why I'm saying that I don't mind waiting even for the hourly gap to form is because below the hourly gap is the midnight price. That's the midnight price right there. So buying below the midnight is basically buying in discount for the day. So seeing price retrace, maybe consolidate, and then at 2 coming down to this BC to continue higher would be nice to see, because that BC on the 15 minutes is the same on the 30 and it's the same on the hourly. Well, would be the same on the hourly if we create an hourly BC, which also aligns with that mitigation, that breaker bar, the breaker block there, and the other block right there. So yeah, honestly, I wouldn't like to see this swing low where we created the SMT to be swept. I just want to see us trade down into this, then continue higher for the day. My targets for the day is that buy side liquidity, and if we do get expand, if we continue expanding, then we'll target that high at the external range liquidity. Anyway, this was a little bit of a longer one, but this is the last one for the week, and yeah, I've expanded on everything I'm looking for. For now, stay safe, good luck, and good trading.